Most traders fail FTMO and other prop firm challenges, not because they don't know how to trade, but it's because their approach to challenges is completely wrong. The mindset is wrong. They treat it like a sprint and chase quick profits, over leveraging and hoping to hit 10% in a week. But here's the truth. Prop firms aren't just testing your profitability. They're testing your discipline, your risk management, and your ability to stay focused under pressure. And if you're entering trades out of FOMO, revenge trading, or after a loss, or you're scaling up risk without a plan, you're not trading, you're gambling. And in this video, I'm going to break down the 5 powerful tips that will help you pass your next challenge, even if you're a complete beginner. And trust me, tip number 4 is the one thing most funded traders wish they knew earlier. Okay, let's get into it. Stop blindly going with the most shiny prop firm or the best giveaway or the best promotion. You gotta be careful with this, especially, they're showing you this massive record-breaking payout and you have the influencers that are promoting their codes. They're promoting the best prop firm out there, their top 5. You need to be very wary, and I've seen it so many times. Like, I've been trading props since 2019, so I've seen it all. The huge discounts before they get absolutely rug pulled. So you gotta be in the lookout, not just for the targets, the rules, the drawdown structures, but also gotta be wary of these kind of red flags when they're giving out these huge promotions, especially if they haven't been around for a long time. You don't know who the founders are, don't know who the team is, and you haven't actually done your due diligence. You need to absolutely go into all of the reviews, but don't just look at the best reviews, look at some of the worst reviews. Go into their Discord communities and review things properly. So once you've done your due diligence, you need to look into the rules. Now, the rules is where you may need to adapt your strategy. You might need to adapt your targets based on the rules of the prop firm, and you may even need to change the way that you manage your risk, the way you manage your stop losses. For example, an FTMO, you require a 10% target for your phase 1, and with other firms it might just be 6%. And so what you want to do is you want to be able to split your risk accordingly, so that within, let's say, under a month, you'll be able to hit that 10%. Now, if it was 6%, perhaps maybe you give yourself 2 to 3 weeks. So you got to adapt your trading strategy, your personality to the prop firm that you're working with. And another thing, if you're a swing trader, something like drawdown limits can absolutely kill your edge. So you need to be aware of this stuff before you even part your money. I would suggest purchase the smallest accounts that you can, just to test it out, just to see if you can actually pass, because you might as well fail on a small account where you didn't have to spend a lot of money before going for the big 100k 200ks. All right, and you got to go with firms that offer more flexible options, like higher drawdown limits. They allow weekend holding, news trading, for example, because the more flexibility you have, the more room for profitability that you can go and you can push. So ultimately, it's about aligning the challenge with your trading style, your mental tolerance, your psychology, and also your availability. You need to be available for when your edge plays out, and you also need to keep an eye out on any rule changes, because these do occur, especially with some of the shady firms. All right, guys, let's talk about risk management over profits. Look, passing the challenge is more than just preserving the capital to grow fast, because ultimately, if that's the real goal for you, if you really want to scale to 7 figures, you want $1 million in funding in the next 3 to 6 months, look, I'm with you. I want you to achieve that. But if you focus on that, you're going to self-sabotage. And I'm going to explain why. Because when you focus on this particular outcome, your intention is wrong. And unless you have a strong relationship with money and the beliefs about money, you're going to screw things up. Because the reality is that the more that you focus on the money, the more that you focus on the outcome, the more losing hurts. Each mistake is going to feel like a punch in the gut, kick in the face, and you're not going to like that. And what happens when you feel this? What happens when you feel these heightened emotions when you make mistakes, you miss a trade, you lose a trade, you blow a funded account, you're just about to get payout, and then you end up blowing it? How does that make you feel? You feel awful. You feel devastated, because your goal of growing capital quickly is suddenly disappearing. So it feels as if your dream is being pulled away. However, if you start focusing instead, and the intention being, I want to follow my rules today. I want to ensure that this trade is one of 100 same trades that I'm going to take, or I'm going to stick to my edge no matter the outcome. That's the kind of mindset you want. And when it comes to risk management, you want to focus on things like what max daily loss you're allowed. What's your overall drawdown? Most traders don't even understand the maths behind this. Inevitably, they end up blowing their accounts because they haven't properly read the rules. They don't understand what daily loss is, or trailing drawdown is, or overall drawdown. And so that's why so many traders fail. You want to keep it simple, okay? When you're starting off, risk 0.5 to 1%. And just keep that consistent through the eval, keep that consistent through funded stage. Just prove to yourself this consistency that you can actually do it. Now, as you get more payouts, as you start scaling, hey, you can look to increase that, especially in the evaluation stage, because you want to pass quicker, and you start building that tolerance towards more risk. Plus, you can afford it as well. And you don't end up recycling or cycling through evals too quickly, which burns a big hole in your pocket. Trust me. I've had so many clients come to me having spent $20, $30, $40, $50,000 on prop firm challenges and seen nothing out of it and have no net profit returns. That's insane, right? And at the end of the day, it's important not to force profits, not to force trades, because you need to give yourself room to stay alive, especially during losing streaks. You need to protect the downside because the upside will come. Your job is to survive long enough for your edge to play out. This is a professional way to think about things. This is how to have a disciplined mindset where your focus is on the process, not the outcome. So stop treating this like it's a lottery ticket. You're just trying to get lucky. That does not work, okay? Look, you've heard me say this before. The biggest challenge in your trading is your psychology. It's not your strategy. The strategy is the easy part, believe it or not. Psychology, now, this requires some deep-rooted subconscious reprogramming, some rewiring of beliefs and behaviors and emotions. You have to dive deep into this, because once you're able to control your emotions, you'll be able to consistently apply your edge. Now, when your emotions are a little bit out of control, when you are dysregulated, you're going to feel tempted to overtrade. You're going to feel tempted to revenge trade. You're going to feel like you want to scale up after taking losses. And you're going to see things that are not there. And perhaps for some of you, you're going to be so fearful, so anxious that you even hesitate to take a trade. So what's happening is you're stuck in this loop, this cognitive dissonance, as they call it in NLP, neuro-linguistic programming, where your beliefs are not aligned with your actions. You believe you're disciplined, you believe you deserve to be a trader, but your actions don't align with it. And so there's this cognitive dissonance, and this causes even more frustration. It causes disappointment. It causes you feel ashamed, and then the loop starts again because your actions are reinforcing these negative beliefs. And so it's important to have a process of rules, of protocols, systems, SOPs, standard operated procedures that are going to not only be aligned, they have to be aligned with your identity, your values, your principles. They have to be aligned with your strategy. And then you have to fit it in to the rules of the prop firm, as we discussed earlier. So when you start doing all of this, you realize that you need some core tools. You need a pre-trade checklist. So this checklist is going to help prime you physically and mentally for the trading session. You're going to need an entry model checklist. This is going to show you exactly how to forecast from your multi-time frame analysis, where draw of liquidity is, where exactly your target is, your narrative, and then your entry trade management checklist. How are you going to manage that trade? What's your total exposure? What's your limit for the day? Finally, you're going to have a post-session checklist. What exactly are you going to do to ensure that you've journaled, to ensure that you have learned the lessons of the day and preparing for the next session? Have you actually been able to detach? So you are able to prime yourself in the morning. Can you disconnect and reset in the evenings? These are such important obstacles to have in your trading. And the reality is that when you mismanage your psychology, this is where 90% of traders fail, that because they don't know how to control their emotions. And I've just given you a great blueprint to start building discipline by following these plans, not how you feel. Like, remember, your emotions are rooted in your beliefs about money, and that influences your decisions. So you got to detach from the money. All right, let's go into chapter 4. Sticking to one strategy through backtesting. So it's so important that when you are within a challenge or when you are in the funder stage, you shouldn't be testing new things on those accounts. You might see some new indicators. You might hear about a new strategy. You need to avoid trying to change things when you're mid evaluation or mid funder stage. Once you've got a strategy, stick to it. Okay, once you have back tested it enough, it's proven it has an edge, you've tested it on a small eval account, you've been able to pass, you've been able to get funded, you look at the stats, the stats are consistent with the back testing. That's when you can build trust. But also, you're going to know your data. And knowing your data is so important. You got to know your win rate, your average drawdowns, your average risk to reward, even your max consecutive wins and losses, because confidence comes from data, not from watching YouTube videos or taking signals. I see traders making so many of these mistakes. It was around this time last year when a trader approached me and he came to me saying that he was struggling with his psychology, his emotions, even though he had an edge and he didn't know what was wrong. So he was starting to lack confidence in himself. So when I asked him about his strategy and I asked him, okay, pull up your data, let me see your numbers, I saw shocked me. He pulled out a Notion page with a whole bunch of screenshots. And he's like, yeah, look, I've got 2022, 2023, 2024. I back tested all of this. These are all my charts. I'm like, okay, all right, this looks good. You've done a lot. But where is the spreadsheet with the data? He's like, oh no, I never done that. I'm like, so you don't really know your win rate? He's like, oh yeah, I win like 50%. Now, what do you mean like 50%? What's your average winners versus average losers? What's your max consecutive wins and losses? He's like, oh, I can show you my latest my latest performance on this dashboard from this prop firm. It shows you all the data here. I'm like, man, that shows you the last 2 weeks of trading. And so straight away, as you can see, this trader was lacking confidence, not just in themselves, in the fact that they didn't even know the strategy properly. So the first thing I done was I got him to do the back testing again, but this time to add it onto a spreadsheet. We used TradeZella to help us out, and that was a game changer because not only did he was able to see the data, he was able to gain confidence, and that was all he needed because he started spotting the mistakes he kept repeating. This is why it's so important to know your data, boost your confidence, and you can trust that when you enter that trade, if you do that trade 100 times, you're going to be profitable. That's the kind of mindset, that's the kind of attitude you need to have. It's all about improving by 1% every single day, using the same method, building momentum, documenting every trade, the reason you entered, your stop loss, your TP, how you felt, what you learned, reframing negative thoughts for constructive ones. This builds accountability and it sharpens your edge over time. Okay, chapter 5, let's talk about plan your challenge like a business project. Don't just wake up and hope that today you're going to make money, today you're going to trade. Just because you went to bed early, you woke up early, and you're going to treat today like a job. That's the wrong kind of mindset. This ain't a 9 to 5. This ain't something that just because you're putting the work in means you're going to get paid. And this is something that is difficult for beginners because you're accustomed to getting compensated for your time and effort and energy. But in trading, you don't get paid in your first year, right? It takes time, and this is a very difficult thing to accept. So I know I said earlier not to focus on the outcome, and I still stick with that. You want to focus more on the process, but you still need to treat this like a business. So you need to have a goal, okay? And this goal is, you got to treat it more like something like having a business projection. So you want to hit 10% on your FTMO to pass, right? So you want to break that down. This is what businesses do. They break down how they're going to get there. So when you really break it down, you should be aiming for something like 2.5% a week or even 0.5% gain in a day. Once you've achieved that in your trading session, you shouldn't be pushing for more. You shouldn't be going for those huge trades. There's no need for that. Build small, consistent gains and allow the compound effect to do its job. Allow your edge to do. Stop trying to hit 10% in 1 week. Let time play out and let discipline do the heavy lifting. This is all about mindset, okay? This is all about understanding your edge and being in the top 10% of traders. But you got to let go and this attachment to the outcome, to the P&L. Passing a prop firm challenge like FTMO isn't about luck, it's about discipline, patience, treating this process like a professional trader would. If you stay consistent with your risk, trade a tested strategy, and manage your emotions like a business owner, not a gambler, you start seeing real progress. It's not easy, I know. And look, it is possible. You can do it. Thousands of people have been able to do it. And I've been able to help hundreds of traders using the exact principles that I've shared with you today. And if this has helped you, make sure that you drop a like, share this with someone who's struggling to pass. And if you're serious about leveling up your trading, your mindset, your protocols, then check the link in the description, because I've got something that can help you fast track your journey.